financial market took a deep breath after long-lasting tachypnea. Coming to stocks, we had AI-related stocks in the United States dipping as investors decided to shift their investments into Europe and Asia. However, on the other hand, Dow Jones had hit its all-time highs, crossing $50,000. Gold is consolidating in a wide range due to geopolitical tensions, and also post-crash we have still a lot of bearish sentiment upon it. Coming to Bitcoin, that's the most interesting asset to my eyes, to be honest. Last week, it had crashed to 60,000, possibly presenting investment opportunities on the long term. Let's see how that's looking on charts.
All right, everyone. So here we are anticipating next week's market movement. Finally, financial markets are slowing down without all that volatility. The VIX has went down to about 18, which reflects that volatility isn't there in the market as much as it was for the past while. So looking at Nasdaq, it had broken below a very nice support here and retraced to it, which reflects a bearish sentiment upon it. And from here, we can expect Nasdaq to fall further down. So there are two things here we should keep in mind. This could possibly be the beginning of that AI bubble popping up on Nasdaq. And this retracement to the same support is not so likely. And because if we take a wider look at Nasdaq here on a bigger time frame, or basically taking a step back, we can see that Nasdaq had retraced, first of all, as I had anticipated in the past week. Nasdaq had retraced to this trend line. We can see big fall there, and then it broke below it to even a bigger time or a bigger frame trend line. So the whole point of, or the whole thing of what's going on here is that we are at a key resistance in this movement on Nasdaq. If it breaks below the support and continues moving to the downside, we might see Nasdaq going to 22,000, right? Because this is being very basically on around an expensive price for quite a long time now, considering all these volatility happening around the world. So right now might be the time for it to start actually tracing majorly. Otherwise, there could be other possible scenarios where, because we have some Marubozu here, right? There could be a possibility where it retraces to fill this gap and then continue to the downside. Because if it does, it will grab some sell positions to be opened there, and also will grab some liquidity from above this stop for those who are shorting right at this resistance. So could be multiple possibilities, but the sentiment is bearish overall. So stick to risk management. Wherever it does, what you want is to go for what you ultimately want to do is go for a short position on Nasdaq from these highlighted areas, right? So if we get a solid confirmation from where it is now, we could short. If not, let it go fill the gap and then retraces down. This is actually a solid support itself because it is at a trend line and also at a solid support, as we can see here. So that's why we are finding this rejection, and because of that, there is a very good possibility for it to go fill that gap to make this market cycling more reasonable, right? And reasonable is a very important word because recently, especially with panic, nothing really works, and that's when we witnessed all this basically historical move and crash in different asset classes. That's about Nasdaq. So Bitcoin, as I had highlighted in the past week, it had fell to 60,000, and also as I had highlighted, once it falls to that, it can be possibly a very good time to buy Bitcoin. And once it hit 60, we can see that we found interest in buying Bitcoin. So there is a considerable scenario where Bitcoin consolidates within this range for some time, which is between 60,000 and 70,000. However, So the reason why there is a good possibility for it to consolidate is that we have 60,000 as an attractive price to buy Bitcoin. Because if you think about it, it had crossed above 120,000, and this is about 50% discounted price upon the all-time above or around the all-time highest price on Bitcoin. So this is a very attractive price to buy it, especially even before it fell below 70,000. We have some institutions, like, for example, the biggest bank in Switzerland has decided to invest to what I recall about more than $130 million in Bitcoin, which means, and that's the biggest bank in Switzerland, which means these hedge funds are seeing this potential that I've been highlighting for you guys for quite a good time upon Bitcoin. Now, these volatility in markets, of course, is going to reflect as in panicking upon Bitcoin, which what had caused this crash, let's say. Technically, we did have an interesting bearish flag reflecting from the trend line itself, and we got a confirmation for a short, which was very solid for us to go with. So if we take a broader look on Bitcoin, right, and this is what I want to highlight. So this crash, and we can see here the bear flag is even more beautifully formed. So we can see that Bitcoin retraced to a solid order block, right? This order block is nearby the trend line, which is a long-term trend line. We're speaking about 3 years, maybe even 4 years. Since 2022, this trend has been forming. So from here, we saw that it had went down below the support, this solid support, took liquidity, and hadn't yet to reach the trend line before we found some interest from buyers as it had reached to an order block. This order block is very important because it's what had caused this bull flag to basically be initiated, as in active towards its optimal direction. So what we are seeing here is a very strong crash. So there are actually a good possibility that Bitcoin goes up to this resistance, right, which is basically that broken support that had became a resistance, and from there goes to the trend line in attempt to break below it, right? Now, the possibilities of breaking the trend line are not very far away. We could see, if things get geopolitically tensioned by market opening. When I say that, I mean stock market opening, which is basically by Monday, or if we get any intensity happen this weekend itself, we could see Bitcoin actually falling below the support, probably slightly below the trend line, to take liquidity from below these lows, and then a retracement back to that resistance. So my optimal advice, if you are interested in Bitcoin, is to go, not just my personal advice, also our approach as Xylostar, would recommend you to systematically invest in Bitcoin starting by now. So don't put all your money in it, because there's still a possibility for it to go further down, right? However, it has a huge potential for wherever it is to go to the upside, right? So what you want is to start investing it systematically, put in a down purchase right now, and if it goes further down, you want to go for another long purchase on Bitcoin. Otherwise, you could actually trade it right now, but it is not in an optimal area because it hadn't really reached a solid support nor the trend line technically, and there is a good possibility that it might want to grab liquidity. So going long right now, as in a all-in or whatever you usually take as in a trade, isn't optimal of an entry, because we're still having that bearish sentiment upon it, especially because the basically movement is very sharp to the downside. So keep an eye on Bitcoin. It's probably, to me, the most interesting asset upon all these 5 major assets we're analyzing today, because some of them I've already spoken about. That's why I'm not saying about. Going into Euro USD. So Euro USD had actually consolidated as we had anticipated. The only thing is we found it retracing to this support, which is solid. Now keep in mind that the Americans are pressurizing this possibility of starting a war over the Persian region, or over Iran, with Iran, whatever it is. So with that being there are also a lot of threats and tariffs implemented against countries who are dealing with Iran, as in trading. And you have to keep in mind that Iran has a very, very important geopolitical positioning between Asia and the Middle East, right? And there's a lot of import and export happening from to and outside Iran. So it's in a very crucial situation. If all these tariffs stay there and we don't find a settlement soon, or any method or any indication of truce, at least if not peace, this will cause the dollar to be pressurized even more down. And as we can see from the support, we found this solid movement. It's not really very solid. It's a bit considerable to form for us what we might see something as like that, going to this resistance, right? Retrace into the support, which would create for us some sort of cup and handle and possibly a movement up to this resistance, right? Because this makes sense as in technically. And also, if you keep in mind fundamentals, most likely we will see more pressure upon the dollar to come by the upcoming week, because this tension is still looming out there. Now, gladly, the UAE is getting involved in this peace talks, hopefully to get a positive outcome, because it's involved with both parties. So that's about Euro USD. Now, going to gold. As we had highlighted, gold should have retraced, and yes, gold did retrace. Well, on my end, I did highlight that there is a very solid possibility for gold. Do we have it in there? No. So there is a very solid possibility for gold, as I had highlighted to you guys in the past week, for gold to retrace to the trend line. And that's exactly what happened. All right, so looking at gold charts, exactly as I had highlighted in the past week, gold did fall to this trend line because we had an enormous crash happening and it wasn't really at any sort of solid support. That's what was compelling good reasoning for gold to technically keep falling till it reaches the trend line. And that's what I had told you guys in the past week. This is what happened, a very solid historical crash. So from here, we can see that gold found a solid support to trace the resistance, and this compels to our analysis also, as it should fall down and retraces to that resistance. So if you look at gold right now, it makes a lot of sense for you to stay away from it, because it is in the middle of a very solid, strong, bearish, impulsive move to the downside, and also a very demanded price, right? And this is a very solid support on gold, because we had this movement basically cooking for an ascending triangle for quite a good amount of time. And I've also had highlighted that at the time. So from there, we saw gold retrace on the upside. So technically, it is in the middle of a basically both sentimental areas of price or price ranges. So it is about the middle. However, we do have that, I wouldn't say slight, it's a little bit above slight of a bullish interest upon gold, because it is actually one of, if not the only reliable, reliable is not really a fair word, the only asset that shall be reliable if the situation between the Americans and Iranians escalate, right? Because Bitcoin is crashing, Nasdaq is, and Dogecoin is doing pretty well, but since the movement has already happened, it's not really the time for you to enter. So that's about gold. If you'd like to enter gold, I would, of course, advise you to be on the bullish side rather than the bearish side. Don't put a very far stop loss. Keep it below this candle here. And aim, I can't actually give you a solid aim. Why? Because we are still in that panic phase, even though markets had cooled down a little bit, but it's still looming. So it could continue going up very impulsively, and it could not. So God knows what's gonna happen. That's about gold. Going to Nifty 50. Now 50/50 did the unexpected actually, and had moved very, very sharply to the upside. Well, we did anticipate a movement to the upside, up to this resistance, However, there was a huge demand on Nifty 50 and it moved to its all-time highest and crashed instantly after market opening. So when that happened, it created a very big gap in price, and we can see that market had retraced to this support after breaking rapidly above it. And from here we are seeing some interest in purchase and also a bullish pattern. So from here we can anticipate a continuation in this bullish movement upon Nifty 50. And yes, I'm saying bullish movement regardless of we have all this big strong red candle. Well, it makes sense because it just opened at its all-time highest, and that was a huge jump on Nifty 50, and people would want to book their profits regardless. So from here we have so many good bullish sentiment, or good bullish indicators rather say. When I say indicators, I don't mean technical indicators, I mean indicators as in indications. For Nifty 50 to continue to the upside, you'd like to go for a long position on Nifty 50. Perhaps now is a very, very good time. And I'm saying that because it's not supposed to be a financial advice. It's supposed to be an intel. And now you have it. Stick to risk management, and wish you all guys a good trading week to come for this week. That will be it from the technical side. Sam Rastan is here. And now I'm shifting the microphone to Mr. Amedian.
Thank you, Samer, for sharing your insightful analysis about the technical side. Here is Amir Amedian, Master of Finance and Investment student in UK, and also financial market analyst at Xylostar. Donald Trump, Bitcoin, and TSMC was the main topic of the last week. Welcome back, everyone, to another weekly market update. Financial markets face pressure due to the expectation of bubble in AI, and tech companies face pressure initially at the beginning of the week. TSMC, one of the biggest chip suppliers to Nvidia and other giant firms, was the center of attention. Analysts of big banks believe TSMC still cannot keep up with surging AI chip demand, which could pressure margins and investor sentiment. It was the primary reason behind the stock market's decline last week. Meanwhile, cryptocurrency was under pressure as well, as Bitcoin dropped below 60,000 for the first time in ages. It all increased the volatility among the financial market participants, but don't forget, volatilities can lead to opportunities in financial markets. Last week, we got so many shocking numbers from the economic indicators and central bank's decision as well. MPC in England decided to leave the rates unchanged at 3.75%. The most important part of this meeting was voting results for the committee, as 5 members voted to keep the rates unchanged, while 4 members preferred a 25 basis point cut to 3.5% for the interest rate. It all drew a dovish stance of the Bank of England and appeared as a burden on the pound sterling. In the United States, the labor market tend to be weaker in light of 4 numbers from the estimates. ADP, which is the best indicator to track the private employment, released by only 22,000, and for the previous period revised down as well. Initial jobless claims for the first time hit 231,000 since December of 2025. From the other side, ISM data was another punch of confirmation of weak labor market in the United States, as the employment in the services sector depreciated, and eventually job opening numbers was the last hammer on the DXY, but say United States dollar last week. Inflation expectations from the University of Michigan, one of the most important soft data regarding the inflation, dropped to 3.5% for the first time since January of 2025 for 12-month basis. Let's get back to the central banks as well. European Central Bank decided to hold the main refinancing rate at 2.15% as well for the euro. From the geopolitical side, Iran and US last week started their negotiations again on Friday in Oman, Muscat, and Trump signed the order to put 25% tariffs on any countries they trade with Iran. From the other side, the US military negotiations has started with Russia, which may end to better geopolitical stability. Last but not least, the corporate earnings beaten the expectations as Alphabet released higher than expectations for the fourth quarter of 2025. AMD was at the same page as well as data centers and AI chip sales record. In contrast, Amazon beaten the revenue expectations with record sales and strong cloud growth, but its stocks fell nearly 10% due to a slight profit miss and a massive $200 billion AI-driven spending plan for the 2026. Let's have a look for the upcoming week. Traders and market participants are going to be surrounded by so many economic indicators next week, as we are going to get the retail sales number from the United States, one of the best ones to track the consumer strength in the US, and NFP numbers, the best one to track the employment stability in the United States on February 11th on Wednesday. And later, we are going to receive the GDP number for the monthly basis for the Great British Pound, and also eventually at the end of the week on Friday, we are going to get the latest updates regarding the CPI, or but say Consumer Price Index. From the corporate earnings, next week we are going to receive the Coca-Cola, Robinhood, Shopify, Coinbase, and Moderna. But don't forget, these firms are going to be at the center of attention, especially the Coca-Cola as it's listed in the Dow Jones Index. Thanks for your attention. See you next week.
Thank you guys for the insights. Thank you for watching us. Stay tuned for next week. Don't forget to like, share, and subscribe.
And leave a comment if you'd like to know about a certain asset.